So Max, let's just talk a little bit about what's behind this divergence in the performance. We positioned out of China in March of 23. Are we likely to continue this stance? And we moved into India, as you know.
Yeah.
In March of 23, COVID's coming out of the blocks. China just wasn't hitting the numbers that we were expecting it to hit.
Yep.
Something wasn't right. We felt it wasn't right. We made a call
Yep.
against popular belief that we should get out.
Yep.
And we did. We looked for a suitable alternative. The natural choice was India at that time.
Yep.
We got into India. It paid dividends. Are we likely to continue this position, or will we change it?
We see India and China under what we call like the emerging market kind of a category, and China is not really emerging market, but let's go with that definition. And we got out of China for fundamental reasons, and again going back to principles and values, and we saw that China and US contest was only going to get more acute and prominent over time, and sort of didn't quite make sense for us to looking for a nice term to use, but it didn't make sense for us sitting here to invest on the other side, because we've seen sanctions happen, Zahir. We've seen, particularly with Russia and Ukraine issue, Russian assets, Russian companies were frozen out of the global markets. And that was a big signal for us to get out of China, because it could get worse before it gets right. So the natural place to look for us as an alternative wasn't Brazil. It wasn't any of the other peripheral markets because they're not big enough, and we just had an obvious contender, which was India. Now, there wasn't a passive or even an ETF at the time that I could obviously see that gave you ex-China, ex-Taiwan. China and Taiwan we see as one, because that's the whole issue, China and Taiwan. China seeking to annex Taiwan, apart from other issues. So we wanted those two markets taken out of the EM exposure, and just, there wasn't an obvious active manager that we could turn to, or an ETF. They all had up to 60-70% China and Taiwan exposures, and which didn't make sense to us. So therefore, after much digging, we did find a manager who aligned with our views, and he made a lot of money for us in the first 12 months of our exposure, and we took a lot of profits there, and we like India anyway. So it's not a parking space for us. For our EM exposures, we're actually in there for the long haul.
And just on that point, we are going to see if we can find some time to connect with this certain individual that Max is talking about, with Rajiv.
Yeah.
Because he's got a lot of insight, a really interesting fella to hear from. So we hopefully in the future you will see us have a conversation with Rajiv to talk about EMs, in particular India.
Yep. So so India is basically a theme that will continue to play in our portfolios. And if you look at returns on the Indian equity markets, it's been 10% year-on-year growth for a long time. China has gone sideways for a long time. So that, I mean, and more organically, India is opening more and more recently under coercion from Trump. Trump wants market access, and India has to give that. That's his issue with China. Give our companies more market access. into your economy. Because India and China both are, have got big barriers to foreign companies competing in their economy. So that's opening. India may pivot to more of manufacturing, which would help. India has its own domestic consumption that combusts nicely. Middle classes are growing. Educated classes are growing. We've got good ecosystem of education, local industry, and local jobs and local consumption. We like that in domestic cycle. It's a full circle, and so that gives us an opportunity to participate. So we'll be in India for a long time to come, I suspect. But we are also looking for China as an opportunity, I might say. If there is an indication of rapprochement between China and the US, China's got huge savings in its domestic system. So US financials, banks, if they get an opportunity to go in there and help, commercialize opportunities off the back of those savings, that's a huge opportunity, bigger than India. But we need to see an opening there. We'll be the first ones to go back into China. So that's where the situation is.